Welcome everybody to the March 2024 edition of the Idaho Department of Labor's Labor Market Insight Series. My name is Craig Shaw, and I'm the Labor Market Information Research Supervisor at the department and your host for today's webinar. Today, Sam Wolkenhauer, our labor economist based in Post Falls, will be providing a sneak preview of the upcoming new long-term projections.
Just one or two housekeeping notes really quick before we get started. First off, I apologize if my voice has a slightly congested quality to it. I'm getting over a cold, but the nice thing about the webinar format is that there's no contagion risk for anybody involved here, which is nice. Secondly, the numbers that I'm going to present to you today are, they're going to be rounded often to the nearest 1,000, and that's simply because first off, I don't want to give people digit fatigue, but secondly, when we make these labor market projections, I like to remember a quote from a professor that I know who used to teach at Boise State, who said that economists that put decimal points in their forecasts are only showing off that they have a sense of humor. Right? So the particular digits are not the important part. So these are going to be rounded numbers just to give you a good picture of where we think Idaho's labor market is going. So with that, we will just jump right into it. Now, first, I would like to give you a brief overview of what our projections program is like. What are the actual publications that we put out? Okay, so we have a few different projections products that we produce here at the Department of Labor to try to guide decision-making in the state of Idaho. We have what we call our short-term projections, which are a 2-year look at the Idaho economy. And then we also have a long-term projection, which is a 10-year, a decennial look. And that's what we're going to be talking about today. And some people wonder, why do you have a 2-year and a 10-year? And the way I like to think about this is our short-term projections, which we do every year, are kind of like taking the pulse of the economy. This is sort of like triage, looking at immediate vital indicators, pulse, temperature, etc. Long-term projections, it's a little more like getting your full physical, getting some blood work done, trying to see what the overall longer-term look is like. So the short-term projections are done every year, and that's just kind of our way of taking the pulse of Idaho's economy, looking at the short-term trajectory, and then we have a longer-term decennial look that we do every other year. And so we're in the process of finishing up the latest round of that. And then what people mostly tend to care about is the subsidiary product of these long-term projections, which is our occupational projections. And the way that works is we'll make a projection of what's going to happen to a particular industry. And from that projection, we can derive the expected need for different skill sets, different occupations. So for example, when we have a forecast for hospitals in Idaho, we say, okay, 10 years from now, hospital employment is going to rise to such and such a level. From that projection, we can say, okay, to staff hospitals at that level, how many nurses are they going to need? How many doctors, trauma surgeons, other support occupations, radiologists? So we can extrapolate the occupational needs based on the staffing pattern of those industries. So that's essentially the overview of our projections project. And what we're going to be focusing on today is this long-term 10-year look at the state of Idaho. So we're going to be looking at what the state's going to look like in the early 2030s, kind of the year 2032 is where we're dialing in on. So one thing that we need to note is that we produce these projections, and on the national level, the Federal Bureau of Labor Statistics produces the exact same projections for the country. And so it's illustrative as a starting point to look at a comparison between Idaho and the rest of the country. So I want to show you what our projections look like and then what the national projections look like. This is kind of what we get. So in 2022, total employment in Idaho was about 876,000 people. And we think that by 2032, we'll be creeping up right onto the 1 million mark. We've got it at about 997,000, so really getting close to that 1 million mark. And that makes for an annual growth rate of 1.3%. And I want to draw your attention to how much faster Idaho is projected to grow than the rest of the country. So the Bureau of Labor Statistics for that same period has national employment growing from 164 to 169 million, which is only 0.3% annually. So less than half of a percentage point. So Idaho is projected to grow more than 4 times as rapidly on an annualized basis as the rest of the country. And understanding this disparity is a really good launching point for this discussion. Okay, so we want to understand, why is it that we feel so confident projecting that Idaho is going to grow much, much more rapidly than the rest of the country? Okay, so if you go to the Bureau of Labor Statistics website, and they have their big press release where they outline their projections, and right up at the top, they grapple with this issue. They essentially acknowledge, yeah, we're projecting pretty slow growth for the country. So the question becomes, why is that? And you'll notice this little quote right there at the top of their press release, which is that projected employment growth is driven by labor force growth, which in turn is constrained by population growth. Okay, so that makes sense, right? Employment can't grow faster than the labor force because you obviously need people to fill jobs for employment to grow. That's a sort of base assumption here. So we want to start out by talking about what's going on with the population dynamics and seeing how Idaho has a much more friendly demographic situation. It's much more conducive to a growing economy. So let's get into this before we look at the particulars of our industry projections. So a subsidiary product that we produce, that we publish, it's on our website at lmi.idaho.gov, is our population projections, okay? And so what we need to note here is that Idaho's population has not only grown much faster than the rest of the country, but we expect it to continue to do so. Okay, so this is Idaho's total population with our projection for this decade that we're going into. Okay, so last year we really started to get close to the 2 million mark. That's, you know, kind of a nice big shiny number that we're all keeping our eyes on. So we were at 1.94 million residents in the state of Idaho last year, 2022. When I say last year, what you have to remember is there's a lag to the publications, right? So in 2023, they publish the population estimates for 2022. Right, so we're always going to be a little bit of a year behind on some of these population numbers. For 2022, 1.94 million. So it's probably safe to say that last year we really got close to that 2 million mark. And we're forecasting that by 2032, we're going to be at about 2.25 million. Okay, so we're looking at adding over 250,000 residents in the coming decade. And this gives Idaho a much faster growth rate than the rest of the country. So I'll show you what that looks like. All right, so this is the relative rate of population growth. Okay, the blue line is Idaho and the green line is the United States. And you can see that apart from a brief period in 2012 through kind of 2015, Idaho grows much faster than the rest of the country in terms of the population. Now, the reason for that little dip in 2012 is because with the housing market crash, fewer people were moving, right? And we know that one of the main drivers of growth, of population growth in Idaho, is people moving into the state. So apart from that little freeze up in real estate and the housing market, Idaho grows much faster than the rest of the country. And then the dotted portions of the lines are the projections, right? So we project that long-term, Idaho's population is probably going to grow at 1.4, 1.5% every year. Nationally, they're only forecasting about 0.6%, okay? So Idaho's population continues to grow much faster than the rest of the country. And one of the things that really surprised us was that the COVID pandemic, even though it caused all sorts of disorder, we had economic turmoil, just sort of broader social calamity that I don't need to go into, Idaho really was strengthened by this. So in fact, even with the pandemic going on, the rate of people moving into Idaho increased. So it's really a testament to Idaho's resilience that something as disruptive as the COVID pandemic actually ended up serving almost more like fuel for the state of Idaho, with more and more people moving into the state. Okay. So on that basis, we have a very comfortable projection that Idaho will continue to grow much faster than the rest of the country. All right. And when you look at this in terms of net growth, you can see how fast this adds up, because you got to remember those annualized growth rates, those compound on each other. So if you start the clock at 1990, right, we're projecting that Idaho will have more than doubled its population by 2032. Okay, net growth of 121%. So in essence, we're talking about the state doubling in size in this time period, whereas the rest of the country will only have grown by a little under 40%. So no matter which way you dice this up and throw it on the graph, you get the exact same picture, which is that Idaho is growing significantly faster, something like 3 to 4 times as fast as the rest of the country. Okay? And so it's that population growth that is the basis of our strong job growth. Now, the other thing that I want to mention is that not only is Idaho's overall growth rate much faster, but the mixture of growth is better and it's more balanced in Idaho than in the rest of the country. And you can see this when you chop up the growth by age group. Okay. So I've chopped up the population growth into 3 blocks. Okay. So you have under 16s on the far left there. In the middle, you have working age, 16 to 65. And then you have retirees on the right. And the blue bars are Idaho, green bars are the United States. And what I want to draw your attention to is that obviously the majority of the population growth, both for the state and the country, is retirees, right? That's pretty obvious. But Idaho has a better mixture in the sense that our other age blocks are growing too, whereas in the country, like writ large, these are pretty much stagnant. So yes, Idaho does have rapid growth of the retiree population. This has 2 causes, right? So this is not only just the fact that baby boomers are getting older, they're turning 65, but also Idaho tends to be a valuable sort of destination state for retirees looking for where they want to live in retirement. But we do at least have pretty good growth in the 16 to 65. Okay. So even though we are heavily weighted towards retirees, our growth rate is much more balanced than the rest of the country. And what I want to draw your attention to is that the Bureau of Labor Statistics and the Census Bureau actually expect that the child population in the country is shrinking over time. And this simply has to do with falling birth rates and the fact that kind of nationally, you have something like 80 to 100,000 fewer children being born every year. In Idaho, again, we have some growth in that category. So while we are heavily weighted towards the retirees, our overall demographic picture is much more balanced than the country writ large. And this is reflected in the fact that Idaho is the 7th youngest state in the country if you look at the median age of the population. So I don't want to, overemphasize the balance here. Idaho is aging because the whole country is aging, but we are aging more slowly and our population growth is much more balanced than the rest of the country. So when you look at that, you see, look, they're expecting the working age population of the country to only grow by 2% over the next decade, right? So that's from the Bureau of Labor Statistics. When that's your population growth, your ability to create jobs and grow the economy is limited. And Idaho's vastly higher working age population growth helps us in this regard. Okay, so Idaho ends up having a lot of things going for it demographically that will allow us to grow faster. So not only do we have higher overall population growth, but we have a younger population, right? We're among the 10 youngest states in terms of the median age, and we have much stronger growth of the working age population. Another thing that's helping us out is that there are higher work rates among the 65 and older population. The age of retirement choice seems to be creeping up a little bit, so that also helps with labor availability. And when you add it all up, we expect that through 2032, Idaho's labor force is going to grow by a little over 15%, whereas nationwide, the Bureau of Labor Statistics is only forecasting a 4% increase. Okay, so there's a huge disparity here, and the math is pretty clear. Idaho is very fortunate to be a high growth state with a lot of things working in its favor in terms of labor force. Okay, so with that in mind, let's talk about our kind of top level projections. This is what we expect for Idaho in the coming decade. We think the population is going to grow by a little under 300,000 people, right? And of course, that is going to include a mixture of retirees, working age people, children, right? So out of that, a little under 300,000, we think labor force will grow by about 146,000, right? So you can see there's some pretty simple math here where roughly 50% of the population growth will translate to labor force growth, okay? And then we also forecast about 120,000 new jobs being created in the state of Idaho over the coming decade, which again is a 1.3% growth rate, much faster, much faster than the rest of the country. And one thing that I want to note before I move on and talk about this 120,000 jobs is that we do expect that there will be additionally some self-employment as well, right? But we want to talk specifically about traditional employment in the workplace. Okay, so what does that 120,000 jobs entail? Let's talk about our industry projections. All right, so again, 120,000 new jobs, and right off the bat, we want to note that we think about 94% of that growth is going to be private sector. Okay, so that's significant. This is primarily private sector fueled growth. And of the public sector jobs that are going to be created, the majority are likely to be in education and to a lesser extent, healthcare. Okay, so this is primarily a private sector fueled, market fueled job creation, job boom. That's what drives economic growth here in Idaho. And of that number, 92,000 are expected to be in the service sector. And when we hear the phrase service sector, this often can become unfairly a sort of dirty word because people think they hear services and they think, restaurants, hotels, some of the lower paying consumer services. And those are services, but services also include a wide variety of very high paying, very important industries, chief of which would be healthcare, right? So healthcare is the largest industry in Idaho in terms of employment. It is nationally, it is one of the bedrock industries of the country in terms of how many people it employs, how much economic activity it produces, and we expect it to be the largest source of new jobs in Idaho. We think about 25,000 new jobs will be in healthcare. Okay, and healthcare is a service, right? Because it does not generally produce a tangible physical product, right? So when we say the service sector, we really mean any industry where you're not manufacturing or making a physical product. So the goods sector, which is going to create about 28,000 new jobs, really is three things. It's construction, you build a physical home, manufacturing, making a physical product, and it's mining and farming and logging, right? Where you extract natural resources. Everything else in the economy is services. Okay, so we don't want to hear services and think, oh, that's just low paying hospitality and recreation. No, that is the bulk of the economy. That's where most of the jobs are. That's where most of the jobs will be created. And that's where most of the economic activity occurs. Okay, so our top performers are expected to be healthcare. We expect a large increase in trade and transportation. We're aware, particularly in the interconnected 21st century retail economy, lots of shipping. There's a large demand for warehousing, trucking, and delivery. And we expect robust growth in construction. Okay, so this is essentially our breakdown here. And I want to spend some time talking about a few particular high performers, right? I want to talk to you about healthcare, about construction, and about manufacturing, because I think that really diving into these industries is going to be much more interesting than just reading off a spreadsheet to you. I don't like it when people read spreadsheets to me on webinars or in person, so I will extend that courtesy to you. And instead, I want to talk in more detail about these industries. Okay, because these are three really important industries that are going to be a major source of growth for the state. And so let's try to figure out what's going on in these industries, because collectively, these are more than a third of the new jobs. Okay, so let's work our way through this. And I want to start by talking about construction. Okay, so this is total construction employment in Idaho. I'm running this back to 1990. And then if you see the black dot in the upper right-hand corner, that's our forecast. So one thing that may surprise you, because certainly where I live, in northern Idaho, in the Coeur d'Alene area, and I know for certain in the Treasure Valley, every time I'm down in Boise, we feel like there's construction everywhere, and that Idaho has been a state that's very, very busy working, building things, right? So it may surprise you that Idaho spent the better part of a decade slogging its way out of a recession in construction employment. Okay, so you can see, if you're looking at this graph, you'll notice a big drop right in the middle. Okay, that's pretty obvious what that is. That's the housing crash. That's, bank failures, financial crisis, 2008. Very major catastrophe for construction, real estate, finance, etc. And so we expect a big drop in construction employment. Okay. But what might surprise you is that it took Idaho essentially an entire decade to dig its way out of this hole. So if you're looking at the graph, what you might notice is that Idaho didn't fully recover those losses until 2020. Okay. So for essentially the entirety of the 2010s, Idaho construction employment was lower than it had been before the housing crash. There are a variety of reasons for this. Number one is you had a lot of workers leave the construction industry, or they moved to states like North Dakota, where, as we're familiar, there was shale oil, so there was construction work there. But bottom line, we lost a lot of workers out of the construction industry. The second thing that happened with construction is you can't choose the timing of a financial crisis, because if you could, you would choose to just not have it at all. But the housing crash and financial crisis in 2008 were particularly poorly timed because they occurred when millennials were young, making career choices. And there was a sort of formative event for millennials of seeing mass layoffs in construction, idling of the home building industry, and immense turmoil sort of in this broad sector. And the result was that millennials chose not to go into construction in the same numbers that previous generations had. And so this created a sort of structural shortage of construction workers that has been really, really hard to dig our way out of. Two sort of indicators that we can use to measure that are, number one, construction workers got significantly older in the 2010s. And that's because there were fewer and fewer young people going into these occupations. So if you look at the average age of construction employees, they were getting pretty significantly older throughout the 2010s. The other indicator of this is that the vacancy rates in construction, and by vacancy rates, I don't mean like vacant homes, vacant lots, we mean the rate of unfilled jobs, right? So you have a posted job for a plumber, a framer, whatever it may be, more and more of those are going unfilled. Okay. And so we're seeing higher and higher vacancy rates in construction simply because there are not enough workers. And for most of us, what this means is longer wait times, longer times on projects, lower capacity to build homes. When you call a plumber, you have a longer and longer time before he can get to your house, right? And this is just due to the structural shortage in employment. Okay. Now, the way that this relates to our forecast is we feel when we look at the data that Idaho has a lot of catching up to do on construction, okay? And there's a large capacity for the state to build more and employ more construction workers, okay? So essentially, we have makeup to do from this lost decade where we were climbing our way out of the hole. And the momentum of the construction industry has been really remarkable, adding jobs really, really quickly over the last several years. And this essentially reflects this pent-up need in Idaho to build homes and catch up. And I'll show you what that looks like a little more. So this is new homes that were built in Idaho. Right? And again, I know it feels like in Idaho, we have construction everywhere and they're just building, building, building. But what I want to point out is if you actually look at the number of homes being built on a per population basis, it was very low throughout the 2010s. Okay, so again, you see this big pattern where there was a big buildup of construction activity leading up to the housing crash. Market falls apart, the Big Short story, right? If you've seen the movie, you understand calamitous, right? And so we expect to see this big drop off in construction activity. But the problem is that in Idaho, it took us a long time to build back up and get back up to a stable level. Okay, so throughout the 2010s, and I know it's hard to believe, throughout the 2010s on a per capita basis, home building in Idaho was not just lower than it was in 2007, it was much lower than it was all throughout the 1990s, right? If you look, this graph goes back to the 90s. Home construction levels actually used to be significantly higher. So what this speaks to is simply the fact that Idaho has a pent-up need for housing, and that creates a strong demand for construction workers. And so that's why we think construction is going to be a very strong growth industry. We think there's a lot of demand for it in the state. This further fuel is thrown onto this by infrastructure spending. You know, we've had some federal infrastructure bills. That's more fuel, more demand for construction. So everything that we see, structural shortage of housing suggests very strong demand for construction workers in the state of Idaho, and it's going to be a powerful growth industry for the state. All right, let's move on to the next industry that I want to talk about, which is healthcare. This is healthcare employment in Idaho. And this graph is kind of astonishing because it almost looks like a straight line, right? You can barely see some wiggle here, but the growth rate here is kind of funny in terms of how consistent it is. And so projecting this is not particularly hard, right? Healthcare just seems to grow at, 2-ish% every year, regardless of what happens. Major pandemic, which theoretically should, cause havoc for healthcare, no, didn't move the line at all. You can look at this and you really cannot even tell that a pandemic occurred, right? And you would think that if it would show up anywhere, it would show up in healthcare, but it didn't. It's just this wonderful, consistent, straight little line wiggling its way up to the top right corner. Okay, but what I want to emphasize about healthcare is that if you look at the demographics of Idaho, we think the demand for healthcare is likely to not only continue to be strong, but to accelerate over time. Okay, so we have healthcare employment currently forecasted to come in at about 140,000 workers in 2032. So what I want to emphasize is that's probably going to be about 15% of the economy, okay, which is by far the largest industry, both in terms of its share of employment and in terms of the amount of economic activity that it generates. Okay, healthcare is also very important because it tends to be one of the higher paying industries. So this is really a major economic engine for us. But what I want to talk about is the fact that the aging of the population is expected to create a surge in demand for healthcare. Okay, so this is the annual growth of Idaho's 65 and older population. Okay, so this is the growth of the retiree population. And you can see that about a decade ago, this was only growing at 4,000 or 5,000 people per year, but it's really begun to accelerate. Last year, it grew at over 14,000 in a single year. And we think that long-term, the black bars are our forecast, obviously. We think that long-term, the 65 and older population in Idaho could be growing at 16,000 to 17,000 people per year. Well, why is that significant? Well, it's significant because obviously this is the demographic that uses the most healthcare. There have been some estimates done by some of the national economic research arms, and they think that retirees, people over the age of 65, consume something between 3 and 4 times as much healthcare as people under the age of 65. Okay, so there's a large ramp up in your healthcare consumption over the age of 65. And so obviously, as this population grows, the demand for healthcare is going to increase very rapidly in Idaho, which gives us more reason to suspect that healthcare really is going to be the bedrock growth industry for us, the number one contributor to growth. The other thing that we want to say about this, though, is that if anything, the upside is even higher because of the particular qualities of the baby boomers. So baby boomers are different from prior generations for many reasons, but for 2 that are particularly relevant to us. Number 1, they are healthier, and number 2, they are wealthier than prior generations. Okay, so let's unpack that for a minute. Baby boomers tend to be much healthier than people of previous generations at retirement age, uh, for a couple of reasons. Not only has healthcare been better throughout their lives than it used to be, but they were less likely to have to work manual occupations. Workplace safety was better. Uh, you can see there's a variety of factors that have made public health better over time. So baby boomers tend to be in pretty good health at retirement age. Secondly, they are by far the wealthiest generation that we've ever had. There's a few reasons for that. They were the first generation where a majority of households had two incomes. So now they have two retirements, right? The boomers were the first generation with mass female participation in the workforce. That's why they were so productive, generated so much wealth. Secondly, the baby boomers fueled really an astonishing period of wealth generation in American history. If you look at what happened with equity markets, stocks, etc., it all adds up to the baby boomers having far more wealth at retirement than previous generations did. And in fact, boomers own approximately 2/3 of all the financial assets in the country. What does that mean? Well, when you have a generation that's retiring that it really checks three major boxes. It's the biggest retiree generation, the wealthiest retiree generation, and the healthiest retiree generation. It all adds up to an enormous population that's likely to be very proactive with healthcare spending so that they can stay healthy and enjoy their retirements, right? So, and add that on top of the fact that they're just by far the largest generation of retirees that we've ever had. They were something like 3 times the size of the greatest generation. So you end up with this enormous population coming in to retire. They're going to spend money on healthcare. They're going to be very proactive about maintaining their health so they can enjoy their retirements. And I have a sort of inside peek at this because my brother is a physical therapist in Las Vegas, which is a hotspot for retirees. And what does he do for a living? He essentially helps baby boomers keep golfing, keep playing tennis, keep enjoying themselves, right? He's keeping shoulders and knees loose so they can hit the links, right? And I don't blame him. So we expect a very large growth in this population, and with it, a surge in spending on healthcare so that they can maintain an active, healthy, happy lifestyle in retirement. And we certainly hope that they do, but it all adds up to gasoline on this fire for healthcare employment. It's going to be a major, major bottleneck of labor for the state. So finally, I want to talk about manufacturing. This was the third industry that we highlighted. And essentially what I want to point out to you is that manufacturing in Idaho is a unique story because over the long run, manufacturing employment in Idaho or in the United States is shrinking. Okay. So this is the net change in manufacturing employment. Green line is the United States, blue line is Idaho. What do you immediately notice? Well, these are on opposite sides of the zero, right? So Idaho has been somewhat of a trend breaker in the sense that we are reeling from multiple decades, sequential decades of shrinking manufacturing employment, right? And trying to figure out what was the cause of this has been a major debate among economists and experts in other fields. Some people wanted to say that this, it's just automation, so we don't need as many workers. Now there's a growing consensus among a lot of economists that this was very clearly driven by outsourcing to countries like China. And you can spend days digging through the papers and the literature on that. But what's undeniable is that manufacturing has been receding in the United States. Okay. It's not just that more and more employment is in the service sector, that we're becoming a knowledge service economy. It's that manufacturing has been actively shrinking, right? And so if you look over the long run, if you run it back to 1990, and this really became an issue around 1990. Okay, this is really when this trend began. You see that manufacturing employment in the United States has shrunk by almost 30%. Okay, so we've lost almost a third of the manufacturing base in the country. But over that same period, Idaho's manufacturing has grown by 40%, which is really quite incredible. And every state does projections. They do labor market projections like this. And so mathematically, you can be quite sure that you can go to many states in the country and they're forecasting, they're seeing that their manufacturing employment is actively shrinking. But not here in Idaho. We've really defied this trend, okay? And in part, this has to do with the mixture of industries that we have. We have three major industries that have been a source of strength. Of course, we have a very powerful wood products manufacturing industry. We have major agriculture and food processing, of course. That's very important. And also, you know, it's harder to outsource because the crops are grown here, they're processed here. And we're blessed to live in an agricultural state that has a robust food processing and even fertilizer production here. And of course, we have semiconductor production here, which is not the norm. Of course, that doesn't exist everywhere in the country. So we've had a really good mix of industries that has sustained manufacturing growth. But it's useful for us to just take a step back and realize how unique this is, right? Most states do not have an economist that can come up here on a webinar and tell you with a straight face, manufacturing is growing and it's a source of strength for the state. Idaho is rather unique in that regard. So it's grown 40% in the preceding decades, and we expect continued growth in the state in manufacturing. And this is partially, we anticipate, going to be fueled by the CHIPS Act. As you know, there's been a push to get semiconductor production onshored back to the United States. We would like to be independent in semiconductor production. So there was a very large federal initiative to create an industrial policy for semiconductors, and Idaho is one of the states that will be a beneficiary of that. So we expect strong job creation from that. Okay, so these are the industries that I want to highlight. We expect all industries to grow in Idaho. We actually don't have any major economic sectors where we expect shrinkage or contraction. We think there's going to be growth across the board. But these are a few of the notable major sources of strength. Healthcare, right? Because we have a growing retiree population that we need to keep healthy. We think construction, because people want to live in Idaho. And for people to live in Idaho, we need homes, right? And we need to build out the infrastructure to support that. And then finally, manufacturing, uniquely a source of strength for Idaho in an environment where it's shrinking across the rest of the country. So just to recap this is a very, very optimistic forecast for Idaho when you look at what's going on around the rest of the country, right? Our stronger and more balanced population growth really sets us up to be one of the top performers in the United States in terms of job creation. And we see this in real time, right? When new job reports are published, every year it seems, or population reports, Idaho's number one, number two, top five at the very worst, right? If we sink as low as 3, that's like a down year for Idaho, which is really an enormous testament to our strength that we're always one of the top job creators. We think that all industries in Idaho are going to grow over time, but we particularly expect healthcare and construction to be major sources of strength. And ultimately, the implication of this is not just to put fun numbers on a spreadsheet. It's to try to guide and provide some insight into what we need for the state to grow properly. Because of course, jobs don't grow magically. You need workers that are trained and able to fill those jobs effectively. We'll need workers that can not only fill these newly created jobs, but we also need well-trained workers who can replace the baby boomers that are retiring, that are taking a lot of their institutional knowledge and skills with them. And so we need to cultivate skill sets to replace those workers. And that's why, as I'm sure you know, education and workforce development are major focuses across the state for stakeholders at all levels. So on the state level, of course, education programs like Idaho Launch, it's very important to cultivate an educated and well-trained and well-calibrated workforce, right? But also on the individual level of companies and area economic developers, we know that developing pipelines for workforce is one of the major focuses. And this ultimately is because Idaho is rather unique. There are large swaths of the country where the economy is rather stagnant simply because the population isn't growing. You're not creating this strong demand for new homes, for healthcare, for skilled workers, because you have a stagnating population. But Idaho is a place that people want to live. And that creates opportunities for us, but we need to have the workforce that's calibrated to fill those jobs. And so that ultimately is what these projections are designed to do, is they're designed to help us get a good grip on what are the specific skill sets and talents that we need people to have so that Idaho's economy can continue to grow into the future. So I believe that takes us to roughly the 45-minute mark. So at this point, I would love to turn it over for questions and answers. We're going to formally publish all of these projections in early April on our website. And all the particulars of the data will be available for you at that point. But I hope you have enjoyed this little peek at what we think is coming for Idaho.
All right, thank you, Sam. Thank you for that overview. I would ask, I've got a few questions for Sam to ask, but in the meantime, if you have any questions that have come up for you or questions that are just in the back of your mind, please go ahead and plug those into the Q&A chat at the bottom, and then we'll impart those to Sam. Sam, I was just gonna kind of backtrack a little bit on the projections and can you talk about why projections, specifically the long-term ones, are so important for Idaho stakeholders?
Sure. Our labor market projections, and specifically the occupational projections that come out of them, are the only systematic forward guidance on the labor needs of Idaho. Okay, so this is there's really no there's no corollary product anywhere in the state data ecosystem that provides specific forward guidance on the need for specific skill sets in Idaho. Okay, so this is the sort of guiding light in terms of data that goes into determining the need for educational programs, what occupations are going to be in demand, et cetera. So these are the occupational projections in particular are very, very widely used for calibrating educational needs.
And maybe you could talk a little bit about the process through which the projections are developed, just how do you make them? And also, we have a question from the audience, and maybe incorporate this into your answer, where food processing falls into the manufacturing numbers.
Yeah, so in terms of how the projections are created, with very rare exceptions, it's going to be exclusively data driven by looking at the underlying trends, the underlying population dynamics. I don't really want to go into the mathematics of it because people will find that pretty boring. But we do create forecasting models, and so it's all going to be data driven. It's not going to be we're not making up numbers on our own. It's all driven by the data process. And I said with very rare exceptions, an example of that of an exception would be the CHIPS Act, right? So we know that there's federal investment coming in to boost semiconductor manufacturing. So that would be an example of somewhere where we go, okay, there's something that isn't reflected in the data, and so we need to account for that. But with the exception of examples like that, it's all driven by a data and iterative process. And then in terms of food manufacturing accounts for about 20,000 of Idaho's 73,000 manufacturing jobs. So it is a very large subsector of manufacturing. And we think it's going to grow at about 1.2%. So we think about 23,000 jobs in food manufacturing in 2032.
And then on your slide where you were showing the difference between the labor force growth and employment, we've been talking about kind of for a number of years now, there's just this kind of a difference between the demand for workers and the the potential growth and what the labor force will support. We've kind of had this wedge, and would you mind characterizing how would you characterize that difference in terms of, in 10 years, if that remains consistent, how that would play out in the economy? Or are we experiencing that compared to what we projected 10 years ago, type of thing? How would you characterize that?
Are you asking about this question about bordering states?
No, I was gonna get to that one here, so this was a different question.
I'll answer this bordering states question because I was just looking at this data. There's a question in the Q&A asking, how do the bordering states influence our labor data? This is a question that I get a lot because obviously we know that people can commute from obviously people that live in northern Idaho are free to drive across the border and work in the Spokane area. But actually, the impact of this seems to be significantly less, I think, than people fear. If you look at the census data on commuting, net commuting from northern Idaho to eastern Washington is only a few thousand people. In a labor force, the labor force in my region is bordering on it's approaching 150,000. So it tends to be rather marginal. And when we look at those labor force numbers, the numbers that I presented to you are labor force availability in Idaho. Okay. So Idaho's labor force is going to continue to grow, and the magnet that pulls people to maybe work in Washington tends to be rather marginal, and it's not going to prevent our labor force from growing.
And then why don't we ask the next question, which was is there a way to discover job vacancy rates?
There's data on vacancy rates from the Bureau of Labor Statistics. They have a program called JOLTS, which stands for Job Openings and Labor Turnover Survey. And you can go and look by industry and you can see what's the vacancy rate in construction or healthcare, et cetera. And so, for example, if you look specifically at construction, you see the vacancy rate climbing sort of inexorably over time across the country due to the shortage of workers.
And then one component that I think people are probably really interested in terms of projections is the occupations. What would you anticipate the occupations to do given what your industry projections are doing? And then when would the occupations data be available?
We're hoping to have that available in early April. And we're expecting growth in a variety of occupations, just because we have growth in every industry sector in the economy. But the major performers are very likely to be kind of what you would expect. Healthcare industries, registered nurses are always going to be one of the most in-demand occupations, just because there's sort of a bedrock foundational role in the healthcare system. You're going to have a high need for skilled construction tradesmen. So it's going to be the occupations that you expect, given strong growth in industries like construction and healthcare. Like if you just pencil in electricians and nurses as some of the most needy occupations, you're not going to be wrong.
And then you've been doing projections for the department for a number of years now. How would you characterize this projection series compared to, I mean, have projections changed over time as you've been doing this in terms of what industries you've been seeing doing well, or is this kind of the same story 2 years later?
It's often the same story, just in terms of how incredibly consistent Idaho's growth has been. And occasionally I talk to the analysts who do projections in other states, and you realize how abnormal Idaho is because they'll be talking about forecasting half a percentage point or a quarter of a percentage point growth for their states. Some of their states are shrinking over time. And here in Idaho, we basically get to put out this really beautiful 1.5 kind of number every time, and we're really never wrong. One of my favorite little bits of trivia here is that even with COVID, even with the pandemic, we still hit our growth projection that we had made the previous year. And you would have thought in April, as the economy is just in turmoil and the country is trying to figure out what the heck is going on, and you have mass layoffs, you would have thought, well, that projection is probably out the window. But no, we actually ended up getting right back on our trend line after the pandemic. So In many ways, I have one of the easiest projection job of any analyst in the country because I get to project the state that just grows at this relentless 1.5 rate year after year after year.
Then one more question that they understand the projection is for the entire state, but is it possible to get projections by city or county? And where is data published for the projections?
We will not have county projections, but we will have them regionally. So we have the state divided into 6 labor regions, and we will create a separate projections data set for all 6 of the regions. And this will all be on lmi.idaho.gov.
And maybe you could talk a little bit about why we don't go down to city or county.
Yeah, a lot of it just has to do with sampling. In particular, the fact that Idaho has a lot of very small counties, where the size of the population is just not large enough for us to actually statistically sample or make publications about it, because we have to protect the confidentiality of Idaho residents, which means we can't release any data that has a too small of a sample size. For example, if you live in a county with 1 veterinarian, we can't tell you what the salary of a veterinarian in that county is, because you know exactly who we're talking about, right? So we have to protect confidentiality, and that creates limits on sample size.
And then do you know of any other states that have projections as good as Idaho?
The only state that really kind of mirrors us in terms of the growth rate would be Utah. Utah's another high performer. And if we're being rational, it's because they are like Idaho. They're a high growth, a relatively young Intermountain West state with a lot of in-migration and population growth. But when I'm being more facetious, I say that it's because they're drafting behind us. If you're a fan of racing sports, you know how important drafting is, and they're directly to the south of us.
Do our projections pick up remote workers that live in Idaho but work for out-of-state employers?
Employment is counted by state. Okay, so if you live in Idaho but you work in another state, you're going to be counted there. You're counted by place of work in our census of employment and wages.
And then a wage question. Can you speak to how wages in the state and how they correlate to our labor market? And there are sectors that should focus on wages to ensure strong labor market growth across the board for all positions.
So Idaho is a lower wage state. We know this. And the question always is it because people are paid less in Idaho for the same job relative to other states, or is it because of the mixture of jobs that we have in Idaho? And it turns out that the answer is sort of a blend of the two. However, wages in Idaho have been growing very rapidly, simply because of the demand for workers. Market forces like that tend to drive wages up pretty quick when you run into a shortage of workers, because employers start to bid each other up, and this creates an overall rising wage environment. In terms of the question, should employers focus on wages, right? Wages are an important component of the hiring process, right? So the market is going to drive wages up where there are shortages of workers and where you are, and when employers run into difficulty hiring. So yes, you should focus on wages, but not necessarily for their own sake, just in the context of you need to hire people, you need to be an attractive employer, you need to be competitive, right? So it's not the place of a labor economist to tell you that you have to give such and such a raise. The market is sending those signals to Idaho employers because of the strong demand for workers that we have.